What if your money could make money while you sleep, without banks, brokers, or middlemen? That's the promise of DeFi, short for decentralized finance. Sounds exciting, right? But also, maybe a little overwhelming. Let's break it down. Here's the deal. DeFi is basically finance built on blockchain, where you use apps instead of banks. No branch hours, no paperwork. You can lend, borrow, save, and sometimes earn way more interest than your regular savings account. But it's not all rainbows. There are risks too. So let's walk through what DeFi is, how people use it, and what beginners in Canada and the US should know before dipping a toe in. Imagine traditional banking flipped upside down. Instead of a bank holding your money and deciding the rules, DeFi apps, called protocols, let you interact directly with other users through smart contracts. These are automated agreements written into code. That means less trust in banks, more trust in math. Popular platforms include Uniswap for trading tokens and Aave or Compound for lending and borrowing. If you're in Canada or the US, you can access most of these just with a crypto wallet like MetaMask. Here's where it gets interesting. Let's say you have $500 in stablecoins, which are cryptocurrencies tied to the US dollar or Canadian dollar. Instead of sitting in a bank earning 0.01%, you could lend it out through a DeFi protocol and earn, for example, 3 to 6% a year. Some people stake their crypto, basically locking it up to help run a blockchain network and earn rewards on top of their holdings. It's like interest, but powered by code instead of bankers. Of course, high returns come with high risk. Smart contracts can have bugs. Platforms can get hacked. Tokens can crash in value overnight. And in Canada and the US, regulators are still figuring out how DeFi fits into the law. That means protections you'd get at a bank, like deposit insurance, don't exist here. If your money's gone, it's gone. So if you're curious, here's how to start without blowing up your wallet. Start small. Think of it as tuition money for learning, not life savings. Use stablecoins. They're less volatile than Bitcoin or Ethereum. Stick to reputable platforms. Bigger protocols like Uniswap or Aave have been battle-tested more than smaller, unproven ones. Keep records. Both Canada and the US tax authorities expect you to report DeFi earnings. What makes DeFi so powerful is access. For the first time, everyday people, not just banks, can earn, borrow, and trade globally, 24/7. If it matures and becomes safer, DeFi could completely change how we think about money. But for now, it's a bit like the Wild West. There are real opportunities, but also plenty of traps. So let me ask, would you try putting even $100 into DeFi just to test it out? Or does it feel too risky? Drop your answer in the comments. I want to hear where you stand. Bottom line, DeFi could grow your money faster than traditional banks, but it also demands way more responsibility. If you're in Canada or the US and just starting out, think small, learn the ropes, and treat it like an experiment. The future of finance might be decentralized, but only if we know how to use it wisely.